All right, Dad, we're going to get rolling with our housing market update for the week.
Yeah, so a couple of different things. First of all, I think Friday we got a reminder of how fragile the bond market is. Right now, we've had several months of successive, relatively encouraging inflation numbers, and that had prompted the Fed to decelerate the rate of increases. They haven't stopped increasing the federal funds rate,
Right.
which influences mortgage rates, but they had decelerated that. They had increased it by less and started to signal maybe they might get to the point of zero later in the year. And then we got a jobs report on Friday that really took the market by surprise. A lot more jobs got created in the economy. That comes out every month. First Friday of every month. It's called the non-farm payroll or the jobs report. And, I've been in the industry for a long time. I remember the very first time I went through kind of one of those whipsaw markets, it was because of a jobs report, even way back, 26 years ago. That it just has a lot of potential to influence mortgage interest rates because mortgage rates are afraid of inflation. And when the jobs report comes in showing a very heated job market, that suggests that there might be more inflation down the pipe. So anyway, that really kind of spiked interest rates between Friday of last week and now here we are on Wednesday. So I would just say that rates right now are still a lot lower than they were 6 months ago, and I think we're still in that general flow of most of the information has been suggesting we're starting to get ahead of that inflation problem, and so I think that subsequent reports will need to bear that out, but be cautious, I would say. And we're still in the high fives. Right now I'm still seeing stuff in the high fives APR for first-time home buyers, and so it's not horrible. It's just it maybe didn't keep going in the direction we hoped it would.
Right.
On the housing side, it's really busy. Surprising, and not too surprising in some ways because here we are. We're coming up on the spring and there have been a lot of latent demand. A lot of people kind of hit the sidelines when interest rates spiked up. Mm-hmm. And so I think we're seeing those people kind of start to come back in. They're seeing rates come down a little bit. And we're seeing sellers come out where there's more inventory, more opportunities for buyers. And we're seeing buyers come out. There's people to buy. And so it is, it's no longer all one way or all the other. So whereas, it used to be just, if you're a buyer, good luck. You're going to have 10 offers to compete with. Now there's properties sitting because they're overpriced, and that's an opportunity for buyers to come out, negotiate. But there's also properties this past weekend, several that went multiple offers, and so what I think we're seeing is a good opportunity for both right now, both buyers and sellers. We'll see kind of where this equilibrium plays out down the road as we get deeper into the spring and maybe into the summer where the real action starts to happen. But right now, I think if you're a buyer or a seller, there's opportunity out there right now.
Yeah, I hear, I listen to Housing Wire a decent amount, Lotus me there, and I hear him always talking about how the typical seller is also a buyer.
Yeah. Right.
And so it's not like, once you start seeing that there's not much reason you don't think it's a good time to buy, then you're also going to have less people selling because they know they're going to have to buy if they sell.
Right.
So if it's a good time to buy, you're going to start to get a little bit better, more listings and more opportunities, it seems like.
Yeah,
so,
no, totally.
It seems like we've seen that played out, so that's good.